Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 new buy ratings from a top-ranked analyst. So let's get into it. Alright guys, welcome back and thank you all so much for being here. TipRanks ranks the performance of nearly 8,400 Wall Street analysts, so to reach the top of those ranks is pretty impressive. Today we're taking a look at 3 recent buy ratings on tech stocks from one of the top analysts in that sector. Of course, we're finding this on the TipRanks website under the Expert Center. You can also access this on the TipRanks mobile app, which you can download using the links down below. Under Experts, we're headed to Top Analysts where we'll see our ranked list. Looking at the technology sector, the top-ranked analyst is Mark Lipacis from Jefferies. Mark is a 5-star analyst with a success rate of 77%, with 380 of 492 transactions making a profit over the last 2 years and an average return of 60%. Looking at his stock coverage here, we can see recent ratings, starting off with Texas Instruments. He recently rated the stock a buy and has an 86% success rating on the stock. Texas Instruments trades under the ticker TXN. With a market cap of $151 billion, they're currently priced at $166. Now, the stock has seen impressive growth over the last few years, but is fairly flat this past year and is down about 8% over the last few months. I know many of us are probably familiar with the Texas Instruments brand, as we likely all used their calculators during school, but they actually have much more going on than that. Texas Instruments designs, manufactures, tests, and sells analog and embedded semiconductors that help their nearly 100,000 customers around the globe create differentiated applications. They have a huge catalog of products, and the applications are used from automotive, communications, and industrial to personal electronics and different technologies. They were pioneers in the transition of the world from vacuum tubes to transistors and then to integrated circuits. They were founded back in 1930 and have 15 different manufacturing sites around the world. They shared their most recent quarterly earnings report back on April 25th, where they reported revenue of $4.38 million. They also reported earnings per share of $1.85, beating expectations by 7 cents per share. Following their earnings beat, they also announced an increase to their dividend. They've been increasing the dividend for the last 19 years with a compound annual growth rate of 25%. Their quarterly dividend is $1.24 per share for a dividend yield of 2.86%, and their next ex-dividend date is coming up soon on May 5th. Despite an earnings and revenue beat and a boost to their dividend, they did fall following their earnings as they provided some disappointing revenue forecasts. They cited weaker demand in many of their markets. But one analyst who recently raised his price target weighed in. Oppenheimer analyst Rick Schaefer said that while the chip maker's results later this year may be disappointing, he is optimistic about its business fundamentals over time, saying, "We see a 2023 as a correction year for TXN and the group. Industrial slowdowns likely spread to auto in the second half. Texas Instruments remains a premier diversified free cash flow versus return story, and we are long-term buyers." Of course, we know our top analyst, Mark Lipacis, came in with a buy rating, but how do the others weigh in? Well, overall, the Texas Instruments stock comes in as a moderate buy that's based on 8 buy ratings, 10 holds, and 2 sells. The average price target of $187 would be an upside over 12%, but we have a pretty wide range in price targets here. Looking at our detailed list, we can see a couple hold ratings with some downside along with those sells, and then we do have some very optimistic price targets, some as high as 38%. So a lot of differing opinions on the Texas Instruments stock. Now, the second stock that Mark has recently put a buy rating on is Luminar Technologies. Now, this is a brand new buy rating that he just initiated on April 25th. Luminar Technologies trades under the LAZR ticker LAZR, currently priced at $5.74. Now, they came to the market back in 2020 during the SPAC craze, where they had a reverse merger and soared right out of the gate, but have been dropping ever since and have been continuing to fall pretty considerably these last few months. Luminar Technologies is in the LiDAR business. Founded in 2012, Luminar built a new type of LiDAR from the chip level up. They've created a LiDAR sensor that unlocks advanced safety and autonomy for automakers. Their technology provides higher confidence detection faster and farther than traditional ADAS, enabling proactive collision avoidance at low and high speeds. This unlocks the potential to make consumer vehicles uncrashable, helping drivers today and paving the way for a safe autonomy. They work with Volvo and Mercedes-Benz for consumer vehicles and Daimler Trucks for the commercial side, and are also partnered with NVIDIA and Intel's Mobileye on the tech side, just to name a few. The company will be sharing their next earnings report next week on May 9th. As a new tech company, they are not yet profitable here. Analysts will be anticipating a loss per share of 21 cents, a bit wider than last year's. And we can see we've had a lot of missed expectations on earnings. Luminar did recently announce the successful build-out and bring-up of their facility in Monterey. This will be a highly automated, high-volume manufacturing facility. The company stated that the first Luminar Iris sensors out of this new dedicated facility are beginning to ship to Luminar's lead global high-volume series production customer in preparation for start of production by the end of this year to support vehicle launches. As I mentioned, top analyst Mark Lipacis just recently began covering the Luminar stock last week. He said that the ramp of the company's high-volume manufacturing facility in the second half of the year to ship to Volvo will serve as a near-term catalyst for the stock. His firm views Luminar as best positioned to capture a dominant share of the nascent LiDAR market. Mark does have the most recent rating on the stock, with a handful of them being from a couple months ago. We'll see many of them reiterate price targets following that next earnings report. It currently comes in as a moderate buy with 6 buy ratings, 2 holds, and 1 sell. The average price target of $13 would be a pretty bullish upside of over 129%. Looking at our recent ratings, we do have Mark's at $12, which would be an upside of 108%, and on the other hand, we have a sell rating with a downside of 20%. The other ratings all have some pretty bullish price targets from a couple months ago, but again, we'll see how those are updated following next week's earnings. And Mark's third recent rating was Lam Research. And this is a stock that he has covered before with 6 previous ratings and an average success rate of 60%. With a market cap of over $70 billion, their stock trades under the ticker LRC, priced at $523 per share, so a pretty big price tag there. Now, the stock is up 10% over the past year, though it has had some big up and downs, and up 27% in the last 6 months, but pretty flat over this last few. Lam Research is a global supplier of innovative wafer fabrication equipment and services to the semiconductor industry. Lam's equipment and services allow customers to build smaller and better performing devices. In fact, nearly every advanced chip is built with Lam technology. They combine superior systems engineering, technology leadership, and strong value-based culture with an unwavering commitment to their customers. The company reported their latest earnings on April 19th, and they did come out with both an earnings and revenue beat. They reported revenue of $3.87 billion and earnings per share of $6.99, coming in well ahead of expectations. The stock did go both up and down following the report as investors digested the news. There was weaker than expected revenue guidance as the company noted continued restrictions on their sales to China. Quick side note that Lam Research does also pay a dividend. It is a quarterly dividend of $1.73 per share for a dividend yield of 1.27%. Following that earnings beat but disappointing guidance, we had a ton of analysts come in with reiterated price targets and a lot of differing opinions. Currently, there are 16 analyst ratings on the stock. And it comes in as a moderate buy with 11 buys and 5 holds. The average price target is $543, which is an upside of 3.5%, and that is because we have some widely differing price targets. You can see we have several hold ratings coming in following that earnings report with downsides from 9 to 4.4% here, but then we also have our buy ratings. Of course, one of those being Mark Lipacis with his $600 price target, which would be an upside potential of over 14%, and others ranging around 5 to 7% upside. So we have an interesting bunch of tech stocks here with recent ratings from Mark. While he has some bullish outlooks for them, it seems that not all analysts agree. So now I'd love to hear from you guys. What do you think about these 3 tech companies and their future growth potential? Let me know in the comments down below. I always appreciate hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence and sticking to your own investment plan. If you made it to the end, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks for watching, have a great day, and I'll see you back here next time.